Okay, so provision, we said that it is a liability of uncertain timing or amount. So liabilities are actually certain, but when you have uncertain liabilities means that either the timing or the amount is not certain. You're not sure. You know that you've got an obligation, you know you have a liability, but you are not sure that how much you have to pay and when do you have to pay. Recognition. A provision shall be recognized when. So, number one, you should understand, as we discussed earlier in the introduction session, that a business might have a lot of, uncertain liabilities. And in introduction session, we discussed that one example for uncertain liability could be warranties, which business gives for its products. The second could be, the restoration of your rental premises or leased premises. You have taken a premises on rent, and you have an obligation that at the end of the lease contract, you have to bring it back to its original condition. This was a second example. A third example could be legal cases. Sometimes businesses, they face legal cases. I mean, their customers take them to the court. Maybe suppliers, they have some cases, and the outcome of the case is not decided at the reporting date. So this is 31st of December. We are preparing financial statements. We know that there is going to be some penalty to us, which we have to pay. It's an obligation, but how much will be the actual penalty, the actual outcome, we do not know. So that is uncertain. Obligation is there, but it's uncertain. Sometimes we have environmental provisions. So our activities, they cause some damage to the environment and we have to pay the fines. And there could be many, many, many other different examples. So one thing we can conclude that there are quite a lot of uncertain liabilities, but remember that all of the uncertain liabilities are not called provisions. So if you have many uncertain liabilities, you need to find out that which uncertain liabilities should we call provision, and then what should we do about them. So there comes the recognition criteria. So there are three conditions. We call it recognition. Recognition means to recognize this thing as a provision and to include it into your financial statements, which means that taking them into your statement of profit or loss, or maybe taking them to your balance sheet. So there are three conditions, the recognition criteria. And the uncertain liability, those uncertain liabilities which meet all of these three conditions, not one of them, all of these three conditions, those uncertain liabilities will be classified as provisions. Okay, so we have many uncertain liabilities. We will see those uncertain liabilities against those three conditions. And those uncertain liabilities which meet all of the three conditions, we call them provisions. Now, what are those three conditions? Number one, an entity has a present obligation, legal or constructive, as a result of past events. So on the reporting date, you have a present obligation, which means that this obligation will not arise as a result of your future actions. It has already been your obligation. For example, when I sold a phone during the year, I actually signed the warranty card. So it has already become my obligation. I signed a rental agreement. I took a premises on rent during the year. It is already my obligation. So it should be a present obligation, which means an obligation at the reporting date as a result of past events. Number two, it is probable that an outflow of resources embodying economic benefits will be required to settle obligation. In simple terms, it means that you have to pay something, you have to spend something. The money will, or the economic benefits will be, will outflow from from the entity, and it is probable. Probable in simple terms, although we can discuss this thing in more detail, but in simple terms, probable means that there is a more than 50% chances. So the probability of outflow of economic benefits, it is more than 50%. And finally, number three, a reliable estimate can be made. Because if you cannot make an estimate, then what to write down in the books? To recognize means, when I say that you have to recognize, it means that you have to include it into your books. And to include it into your books, there is only one way, that you need to pass a double entry, a debit and a credit. And to put a debit and credit, you need to have a reliable estimate. You know, If I ask you now, let me for the sake of simplicity, let's see that reliable estimate. What do you mean by? Okay, let's suppose we sell telephones. Okay, so we sell phones, and you come to me at the end of the year and you say that, do we need to create a provision for warranties? And I say, what estimates do you have? How many telephones did we sell? You say, we sold 5,000 phones during the year. And this is a certain brand. I don't want to name any brand, but a particular brand of, 5,000 phones of that particular brand. And then I say that, what is our past experience? How much telephones do they, how much telephones they come back in warranty? And you say, you know what, based on our past experience, we know that 2% of the phones they come back in warranty. So if we have sold 5,000, 2% of 5,000 is 100. So we say that it is expected that 100 phones will come back. Okay, so this is an estimate and we can rely on it. Why? Because this is what is shown from the past data. And then I ask you that on average, how much money do we spend on each phone? And you say we spend $100 on each phone for repair when it comes to warranty. And this is again $100. It is an estimate from the past data. It is a reliable thing. So then I say, okay, the total amount for provision is $10,000. So let's put $10,000 provision. Let's create a $10,000 provision. I did not take the number from air. Okay, let's call it 20,000. Let's call it, 15,000. No, there was a method which was adopted, and that method was justified by an evidence taken from the past experience. This is what we call reliable estimate. And what do we do with that, by the way? When I say recognize, what we need to do, we need to pass a double entry. We would say that debit the warranty expenses into profit and loss account. So it will be recognized as an expense in the profit and loss account. And credit will say our provisions with 10,000. So what it is doing now, or why we are doing it? Because during this year, we sold these telephones and we know that we have recorded the income. We probably recorded sales for $100,000 or whatever. And based on the matching principle, it says that the income and expenses belonging to one period should be recorded in the same period. So if I am generating some revenue and if I'm making some income, then all of the expenses which are related to that income, which is related to that revenue, should also be shown in the same year. Okay. So if I am putting income in this year, and then these telephones which I sold throughout the year, they will start coming back to me in the next period. And I pay their warranty expenses here. If I do not record warranty expenses here, what will happen? That you are recording revenues in this period and you are recording expenses in that period. So if I do not make this provision for warranty expense, what will happen? That the profits will be overstated in this period because some of the expenses which belong to these telephones which you sold, you recorded their revenue, but you did not record the expense for the repair or expense for the warranties, and you are taking it up to the next year. So your income statement is not giving the correct number. Similarly, you do have a liability of correcting this telephone. And if you do not show this liability on the balance sheet, so the balance sheet liabilities are wrong, income statement profit is wrong. You are actually overstating the profits and you are understating the liabilities. So therefore, we say that if these three conditions are met, we will recognize. And when I say recognize, it means that debit profit and loss account, credit provisions. Provisions, they go as a liability on the statement of financial position, and debit P&L will be actually, when I say debit P&L, so it means that debit warranties expenses. And warranty expenses, they will go into P&L, okay? Remember that all three conditions should be met. All three conditions should be met. Number one, it is a present obligation. Number two, it is probable that an outflow of economic benefit will happen. And number three, a reliable estimate is available. If any one of these three are not available, then you will not call it a provision. Actually, you will call it a contingent liability. This we will discuss a little later. when we discuss contingent liability. But as far as for provisions are concerned, they should be recorded as soon as these three conditions are met. Now, we need to discuss few of these things in more detail. For example, what is a present obligation? Then what is probable? And how to get the reliable estimates. These are the three things which we would quickly discuss a little bit more. Unless all of these conditions are met, no provisions can be recognized. What is probable transfer of economic benefit? A transfer of economic benefit is regarded as probable if it is more than 50% chance that it is going to happen. In some cases, what is happening that an individual thing does not have a 50% chance. For example, when I sell a phone, you told me that the phone has a 2% chance of coming back in warranty. Each individual phone has a 2% chance of coming back in warranty. So if you see them individually, they might not qualify as a 50% probability. But when you take it as a whole, my question is that, are you selling phones? Yes. What is the probability that some of the phones will come back? There is more than 50% chance that some of the phones will come back. Okay, so it is not like we say that it is more likely than not to occur. Okay, so it is going to occur. It is going to occur. It is going to happen. It will happen that some phones will come back to you for a warranty. So in case of a lot of small transactions which are similar in nature, what you do, you don't see the probability individually. You actually see the collective one. Then transfer. Yeah, this is what it says, that sometimes the individual probability extremely small in respect of one specific item, and therefore you should consider the whole population, which means the total phones which you have sold. So this is, and when you see the total, then it must be greater than 50%. Review of provisions. Provisions are reviewed each year and adjusted to reflect current best estimates. Okay, this we do in a while. This is a separate topic. Okay, so this is until here. We do this review thing in the second session.